Hello and welcome back to Sam's Finance, where I talk about personal finance, companies and their stocks. In March 2020, I made a video about the brokers that are available in Germany, and then I went ahead and compared them in detail. This video was well received by you, and because we saw some changes and new players in 2020, I decided to do an update video for 2021. These are the 12 brokers we are going to look at. Comdirect, Consorsbank, DKB and ING have been around for more than 20 years now and were the first online brokers, if you will, who challenged the affiliated banks back then. Actually, they weren't actual online brokers at first, but started off by trading over the phone and over the fax machine. These four brokers can be understood as the first generation, and what also sets them apart from the following is that they are all true banks too and don't just hold a securities trading license. Today they serve as the premium brokers. Around the year 2008, the second generation arrived with Onvista, Flatex and Degiro. What was special about them was that they started directly as true online brokers on the internet. In 2019, this second generation was joined by the third generation with the names of Justtrade, Gratisbroker and Smartbroker. This generation was aggressively focused on bringing down transaction fees and in doing so very much helped to make the stock market available and accessible for many people. In 2019, Trade Republic entered the market as a kind of German Robin Hood, and in early 2020, Scalable Capital followed. To me, those two represent the fourth generation of brokers because those two clearly focus on their smartphone apps and a contemporary user interface while also being low cost. So much for the evolution of the German brokers. Maybe let me also point out who is playing for one team here. Comdirect and Onvista are both brokers by their German mother Commerzbank. Comdirect is the premium broker, whereas Onvista serves as discount broker. Consorsbank and Smartbroker also share the same French mother BNP Paribas. Consorsbank serves as a direct competitor to Comdirect in the premium market, whereas Smartbroker competes with Onvista in the discount market. And then also Flatex and Degiro belong together since German Flatex bought the Dutch Degiro in late 2019. I hope this already gave you a basic understanding of the market. And if you are now wondering, like this comment did, why Trading 212, eToro and other platforms like Plus 500 are not part of this comparison, this is because these platforms are oriented towards social trading. Their core business is selling you CFDs, contracts for difference, which are only derivatives of the underlying assets, like an Apple stock, for example. If you buy an Apple CFD, you don't actually own Apple stock and therefore you are exposed to the counterparty risk. And yes, I know that Trading 212, for example, now also offers to buy true shares, but their main business is still somewhere else, and I always get the impression that they want to suck you into their vortex of trading high-risk leveraged CFDs. They actually also have to warn you of their own services on their website, basically just like these smoking kills warnings on cigarette packs that we see right here. And this really has nothing to do with steadily building wealth long term, which is what we are trying to do here. So just to let you know, that's the reason why those platforms are not part of this comparison, even though they seemingly offer good conditions. Okay, then let's get right into it, and we start off with Comdirect. Look, I hope you see me up here. Custodian fee means a general fee to have a brokerage account. If this is not the case, like here, the custody account is itself free, which is of course a good thing, therefore it's green. Then there is no interest on the allocation account. You might wonder why this is green and therefore good here. This is because some brokers charge negative interest rates on the allocation account, as we will see in a second. Fees on dividend, down here, would mean that you have to pay a fee for every dividend you receive on top of the taxes. This is not the case here, and actually not the case for all other brokers in this video. I still included this criteria because there were brokers in the past who charged for dividends, so you might want to watch out for this. Next, we have fees per trade. Domestic, and this usually is one of the most important rows or numbers and figures to look at for you, because this is the price you pay for a normal stock or ETF order. Domestic refers to the German exchange preferred by the respective bank. For trading on other German exchanges and international ones like the New York Stock Exchange, for example, higher fees apply, or can apply at least. However, you can normally just trade most of international stocks on the favorite German exchange anyway, so you don't have to trade on the New York Stock Exchange to buy American stocks. If you want to buy some Apple shares, for example, you just have to pay the fees displayed here. Let's stick with this Apple example. Apple currently costs 103 euros a share, so to buy just one Apple share, you would have to pay 4.90 euros plus 0.25% of the order sum. Here that would be 4.90 plus 26 cents amounts to 5.16 euros. However, 5.16 euros is less than 9.90, and therefore we would have to pay the minimum fee of 9.90 here. To pay more than the minimum fee, one would need an order size of about 800 euros. So that's that. And just as a reminder, I was talking about these calculations here. Next up are ETFs and savings plans. Savings plans work like this. You determine that you want to invest, let's say, 200 euros of your income every month into an ETF. Then the broker will buy 200 euros worth of this ETF for you every first or let's say 15th of the month. These savings plans can be stopped at any time, and it is even possible to use them just for one buy. And that makes them a great tool for building wealth, especially for beginners, because they offer cheap access onto the capital markets. Free savings plans mean you don't have to pay any fee for the specific ETFs. This selection might, however, change from time to time, meaning that free ETF savings plans can become normal ETF savings plan that then cost a little bit of money. This is just a general side note here, also for all the following brokers. Then the ETF savings plans are that are not free cost 1.5% of the order size and fees. A non-savings plan lump sum ETF investment costs the same as a normal stock lump sum investment. So of course this number right here, or this calculation, is the same as we had above. The smallest ETF savings plan is 25 euros. That means you can reasonably start investing via ETF savings plans with just 25 euros a month. Then here I calculated some examples of fees for ETF savings plans that are not free. If you choose one of the 135 free ETF savings plans, of course, then you don't have to pay any fees, no matter the order size, as long as it's over to the 25 euro minimum. This is important to keep in mind. Otherwise, this is easy. This will confuse you easily, also with the other brokers. Yeah, the 30 euros in fees for a 2,000 euro ETF savings plan are in brackets here, because in this case, it would actually be cheaper to make the purchase as a lump sum investment. That would then only be 14.90 euros instead of 30 bucks in fees. So we finished the ETF section. let's move on to the stock section up here. Stock savings plans are basically the same as ETF savings plans. There are more than 300 available here, and the minimum savings plan is 25 euros again. The fees are also the same as with ETF savings plans. Moving on to services. There's a website as well as an app available for trading. Since Comdirect is a German broker and bank, they automatically do the capital gains tax handling for you. And that's for the about 25% capital gains tax in Germany that becomes due for every dividend and when you sell a stock or ETF position with profit. Of course, taxes are never nice, but at least they handle them for you. And also the withholding taxes are automatically deducted. You can also trade warrants or options. And Comdirect offers many domestic and international exchanges you can trade on. Some with higher fees than displayed here, but we already talked about that. Yes. Okay, so let's get to the summary of Comdirect. You pretty much heard me say all this. No basic fees means this is all green. No minimum order size. Free and many ETF savings plans, stock savings plans are available, and they have a broad assortment, meaning they have many ETFs, many savings plans, and especially they have a selection of exchanges you can choose from. However, on the flip side, they are quite expensive. I will now go over the other brokers pretty quickly, and I recommend you press pause if you want to take a closer look. So we continue with Consorsbank, and that's basically completely the same as Comdirect. Same fees, same everything. I will directly jump to the summary. No basic fees for Consorsbank as well. No minimum size of order. Free and many ETF savings plans. They have stock savings plans, or they offer that. And they have, again, a big and broad assortment. And they are quite expensive. Actually, they are nearly the same cost. Yeah. Between Consorsbank and Comdirect, I would maybe choose Consorsbank because they definitely don't have a custodian fee, also after 3 years. And you might be wondering, what is Sam talking about now? I'm talking about this down here, the custodian fee, at least for the first 3 years. Then one has to meet some easy conditions so that it stays free. So Consorsbank never has a custodian fee, also not after 3 years, and also not if you don't meet these conditions. They have more free ETF savings plans and more stock savings plans. However, they technically are a little bit more expensive because their minimum fee is $9.95 and not $9.90 as with Comdirect. Yeah, so I'm talking about this number right here. Okay, let's move on to DKB. DKB, and no basic fees, very nice. Flat order fee. They have no free ETF savings plans, yeah, but 149 for about 50 cents. They have no stock savings plans, and everything in the service section is green again. So let's jump right to the summary. No basic fees, no minimum size of order. Most ETF savings plans of all brokers, they have a broad assortment. On the flip side, they are quite expensive again. No stock savings plans are offered, and no free ETF savings plans. And I'm actually sorry. No, that's true. But I'm just wondering. Yeah, I'm not sure about that. I'm sorry. They might not have the most ETF savings plans, but they have many ETF savings plans, definitely. And they for sure have no free ETF savings plans. That's a bummer, of course. Moving on to ING. Very much green here. Let's jump right to the summary. No basic fees, yeah, all green. No minimum size of order. Free and many ETF savings plans. Yeah, again, they have free savings plans, not unlike DKB. They have stock savings plans, also unlike DKB. And however, actually, the savings plans get quite expensive quickly because they are charged with 1.75% in fees if you're not going for free ETF savings plans. Of course, yeah, again. Then moving on to Onvista. Onvista, yeah, green here, a flat fee of €7. No free ETF savings plans, however, 129 for €1. No stock savings plans at all, and no app. And I can already tell you, they not only don't have an app, also their website where you have to trade on it's not fun. It's an unintuitive design, and I was a customer with them. The fees are fine and so on, but the website is really not up to speed. And they have no app, as I said, no stock savings plans, no free ETF savings plans. However, they also don't charge any basic fees. There's no minimum size of order, which is good as well. And they have consistent ETF savings plans. So they don't change their offerings around all the time like some other brokers might do. That's what I can tell you from my experience with them. Then moving on to Smartbroker. You can maybe call them the broker of the fine print at the first glance, because you see these 3 remarks down here. They charge negative interest rates on your allocation account in some cases, as you see here. That's the first one we encounter. But it's only, and follow me down here, only starting 3 months after the respective transfer, and only if the average cash quota in the account is greater than 15% compared to your portfolio. So, and these conditions make this pretty much not really relevant for me. I'm also a customer of Smartbroker. That's why I can tell you my experience with them. Especially this, you would have to really store a lot of cash on their allocation account for a longer period of time, so that would come viable, or that would endanger you in paying negative interest fees. So that's not really a big con to me. That's all I want to say. Then they have an interesting fees here. Yeah, below €500 you always pay €4 flat. Above €500 order size, you can pay €0 in fees, which is very nice. But then you have to go with one specific exchange, that's Gatex. If you want another exchange like LNS, for example, that's €1, and all other exchanges are still €4 flat, also above €500. But €4 is pretty good, as we will see later on. They have free ETF savings plans. They have stock savings plans, 102. However, there are no fragments possible. And that's really a bummer. That's why this is also not in green here, but it's also not red. It's like, thank you for nothing, basically. Yeah, okay. Then they also don't have an app. And I can tell you, their website interface is very, very similar to Onvista. It's not actually similar, but it's similar in its unintuitiveness, if you will. On I already talked about the negative interest rates, and that's not really a big point for me. There is no minimum order size, which is nice. There are free and many ETF savings plans. They have a broad assortment, so many exchanges you can trade on. And for this broad assortment, I think it's very cheap. And again, down here, the stock savings plans are neither a pro nor a con, because of this no fragments issue. Talking of Flatex, there's a little bit of red here. There's a custodian fee. So you don't get around that. Yeah, you cannot get around the custodian fee. That means if you have a portfolio of like, I don't know, it doesn't matter which sum, but you definitely have to pay 0.1% per year of this portfolio sum as a fee. Yeah, and there are also fees on the allocation account, negative interest rates. Yeah, basically the same we saw with Smartbroker, but here it's definitely the case. They don't give you any grace period. Yeah, then moving on, that's fine. Then what's interesting here is the fees per trade are not domestic as with others. They are also flat for international exchanges. So you can trade on the New York Stock Exchange for just $5.90. You can basically trade on whatever they offer for $5.90, and that's really nice if you're looking for trading internationally or on international exchanges, to be specific. This might be an option for you. They have free ETF savings plans. However, they don't have stock savings plans. They have a website, they have an app, and they offer many exchanges. Yeah. No minimum order size. Yeah, that's good. Free and many ETF savings plans. I just said that. Broad assortment, definitely. Cheap international exchanges. That's maybe the biggest pro for Flatex. However, there are custody fees. There is a negative interest rate, and there are no stock savings plans. Moving on to Degiro, there's no, everything's green here. There's a not applicable here because Degiro does not offer an allocation account, and the funds will be deducted from a reference account of your choice, which is neither good nor bad, to me at least. Then they have free ETFs, but no automatic savings plans. So they have 200 free ETFs, but you have to do this manually, and you can do this manually for free once a month. So that's their model. They also don't have stock savings plans, and maybe the biggest con, they don't have capital gains tax handling. Yeah, we will get to that here in a second. You have to do your taxes on your own then, because they are Dutch based, and then therefore they don't do the German taxes for you. No ETFs and stock savings plans, as I said. No basic fees, which is good. A broad assortment, definitely. Cheap international exchanges, definitely. And also in German exchanges, there are cheap, definitely. They have free monthly ETF buys. However, they don't have any kind of plan, automatic savings plans. Moving over to Justtrade. They have, again, interest on allocation accounts, and they have a grace sum of only 10 euros. So actually, you have to pay negative interest rates here. Just like, what was it? Flatex. Yeah, it's the same with Flatex. It was the same with Flatex. No fees on dividends. And they have a minimum order size of 500 euros. So you can't trade below 500 euros. You can, of course, sell complete positions even if they fell below 500 euros, but only if you then sell complete positions. And it's only for selling, not for buying. But they are free. Free trades. If you can live with this minimum order size, then they are free. They have no free ETF savings plans, however. But they offer 1,000 plus ETFs. Yeah, so good assortment, no stock savings plans as well, and only 2 exchanges, and not so many, but they have an app, they have a website, they have to do taxes for you, they offer warrants, and so on. Basically, we've already talked about this right here, and I forgot that they also offer crypto trading. That's one of the only brokers I found that also directly enable crypto trading. So that's what kind of sets them apart. Moving on to Gratisbroker. pretty much green here. Then they have also a minimum order size. But if you can live with that again, then they are free. That's why it's called Gratisbroker. They have no ETF savings plans. They have ETFs, 350, which is not all too much in my point of view, but they have it. They have no stock savings plans. They have no app, but they state that their website is optimized for mobile devices. So kinda there you go. And they only offer one exchange. Free trades, no basic fees. That's good. However, biggest con maybe is the minimum order size, no savings plans, and the limited assortment in terms of ETF assortment, and only one exchange. That's basically also belonging to this point actually. Trade Republic. Green here. Very easy pricing model. €1 per trade. €1 for selling, €1 for buying. They have ETF and free ETF savings plans. They have even stock savings plans. They, however, don't have a website. That's the only broker that doesn't offer a website to trade on. They all go for an app. And that's what I'm doing here, or what I did here was it's because all savings plans are free. That's just the number of total ETFs you can buy with lump sum buys as well. And also only one exchange. Yeah, so basically we looked at that. And I also included that the app interface is very intuitive. I really like it, I gotta say. And it's a very simple cost structure. Like I was able, I could actually put in these numbers here without looking at their website even once, because it's just €1 and the rest is very, very simple. And they have free stock savings plans. That's one very big point for them. And we will see that later. Then moving on to Scalable Capital. Basically, Scalable Capital's pricing structure breaks my table because they offer flat rates. But first things first, pretty much green here. A smaller minimum order size of €250, and actually you can even get around that if you buy on one of their two exchanges. On the second one, which is Etc., the minimum order size is dropped for trades on Etc, which are $3.99 plus 0.01% exchange free, minimum $150. So that makes it pretty much $5.50 at least. And then one has to say, with this amount in fees, it doesn't make sense to trade less than €250. So this is drop in the minimum order size for Etc is, to me, completely worthless. But moving on, fees per trade, pretty cheap. And the zero here goes for, you can choose one of their two flat rates. So they have a free broker, which is €0 per month, and then you pay 99 cents per trade, or you go for their prime broker and pay 35 euros 88 per year. Then you can do unlimited trades for free, or you go for the prime broker Flex, which is $4.99 a month, which is basically the same as the prime broker, just built on the monthly basis or not on the yearly basis, and it's therefore more expensive. Yeah, so if you book one of those two flat rates, you actually of course you have to pay the flat rate, but then every trade is for free. So that's what I'm trying to display here. There are also free ETF savings plans, and yeah, I have to say that one savings plan is free with the free broker and therefore totally free. Prime and Prime Broker Flex have unlimited free savings plans. There are, however, no stock savings plans, and yeah, everything else is green here, except for that it's only two exchanges. One of them you got to know already, which is Cetra, and the other one is I'm not quite sure. I think it's Getex, but don't. Yeah. Okay, so quick summary, no basic fees, cheap trades, definitely. One truly free ETF savings plan with a big and broad ETF assortment. Their ETF assortment is really big. Trading flat rates are available if you like that, if you can make use of that. They have a nice app and a nice web interface. However, there's a minimum size of order. Of course, we talked about this Thetra loophole. They have a limited stocks assortment and no stock savings plans and only 2 exchanges. Yeah. Okay, so let's get to look at some numbers and to help you what should you actually choose. Of course, it really depends on what you are doing, what you want to do, which sums you're investing, but more on that later. So case number 1, a 1 promotion ETF savings plan. So promotion ETF savings plan means if the broker offers a free ETF savings plan or free ETF savings plans, then I assumed that you went into them, even though they can change, and then you would pay these prices. So here, as I said with Degiro, there are no really automatic savings plans. However, they allow you to do 1 free ETF trade per month. That's why it's displayed here as it is. We already talked about, I don't think we did. Onvista doesn't allow you to make savings plans bigger than 500 euros. However, I heard that you can just then make 2 savings plans on the same ETF, and therefore you get to 1,000. So it's actually maybe possible with a loophole. Yeah, and I think you can take your time and look at that yourself, because this second slide right here is more important in my point of view. Because, as I said before, these promotion ETFs can get changed around from time to time, and you don't necessarily want to change the ETF you are saving on with them just because it's not a promotion ETF anymore. So that's why I think it's really important to look at the non-promotion ETF savings plan fees. And you of course see the fees displayed here. And if I personally try to get my fees below 1% at least. That's the orange fields. Yeah, so €1.50 would be less than 1% fees when you make a ETF purchase or a savings plan of 200 euros. Yeah, just to help you explain that. So good, green is good, of course, and so on. Then case number 3. You just do 1 trade, no matter stock or ETF, and then you see the trade size here, and of course you see that with the larger sums, also with the premium brokers, it gets relatively less expensive, or relatively cheaper if you wish. Yeah, I suggest you pause here and you look at, I would like to save this and that amount, and what's then maybe best for me. Yeah, or I would like to trade this and that amount every month. And yeah, you can do that here. And here you see this Xetra loophole displayed here. That's why it might seem a little bit irritating at first. Yeah. Okay. Now, what would I recommend? I would recommend Trade Republic. You start off, especially if you're a true beginner, you start off with Trade Republic. They have a nice app. They have a very easy and simple fee structure. It's very simple to get into the game with them. They have low fees, so you can start with very small amounts, but I'm getting to the reasons in a second. And then maybe later on, I would add Smartbroker onto it. That's also what I do. So I only recommend what I'm personally doing, because I think Smartbroker basically solves the issues and the weaknesses of Trade Republic, but we will see that on this next slide. So combined, they make up these pros and cons. So if you go for Trade Republic and Smartbroker, there are no basic fees for both of them. There is no minimum order size. They basically for all trades below $500, you pay €1 with Trade Republic, and then above €500 order size, you actually have free trades with Smartbroker. Then you have app and web trading, because Trade Republic offers the app and Smartbroker offers the web trading. Combined, you really have free and many ETF savings plans to choose from, because Smartbroker has this big assortment. The assortment was one con of Trade Republic as well, and that's Smartbroker solves this. So they don't, especially for ETFs, they don't have a huge ETF assortment. And then you also have free stock savings plans with Trade Republic, and as I just mentioned, the broad assortment in general. The major con to me here still is the unintuitive Smartbroker website interface. But if you're mostly trading on the app with Trade Republic, or not trading, of course, but managing your savings plans is a better way to put it, then that might not be too bad. So that's why I would recommend this combination of Trade Republic and Smartbroker. It might actually always be good to, at least later on, to have not just one broker, because if one is down, you can't do anything. So that's why normally you have at least 2 brokers if you are not a bloody beginner. But of course, there are situations or simply tastes where you and I would make a different choice. For example, if you value a good website and a premium service very much, then you should take a look at the Comdirect and Consorsbank, the premium ones. And all I can try is to give you the best broker for all round application. That's what I try to do here. And there you go. This is my German broker comparison for 2021, and I also told you what's the best choice for me. And in my opinion, If you have any questions or even more important corrections to make, please drop them in the comment section. And just before we close off, I would like to thank you, because this channel just reached 50 subscribers 2 days ago. Even if it sounds a little ridiculous, but it means a lot to me, and I'm happy to see a few people watching my videos, so thank you very much. And with that said, thank you for watching. You can help me out to grow this community further by subscribing to my channel, and remember, just be lekker. Bye bye.